Hi everyone and welcome to Inderes TV. Earlier this week, Sitowise released their Q1 report for 2025, which led to us updated our report. You can find it at inderes.se. But with me to talk about the report, I have our analyst, Lucas Mattsson. Welcome, Lucas.
Thank you, Jesper.
The revenue came in line with your expectations, but the underlying profitability was slightly lower than what you expected. What factors were behind that?
Yeah, so as you mentioned, group revenue was in line with our expectations, although with small differences on a business area level. Looking at the profitability, that was below our expectations, mainly due to the lower revenue, of course, but also due to the tightening pricing environment and also the lower utilization rates. But looking at operational profitability, meaning that we adjust for the negative calendar effect, meaning one working day less in Finland, the sort of operational profitability was quite stable and almost at the same level as last year, and actually improved a bit in the Finnish operations. So I would say that the positive highlight in the report was the infra business, which performed better, supported by demand from green transition projects. But overall, it was quite weak market and a challenging quarter as expected.
If we're looking at the revenue, it decreased by 6.66%, mainly due to the situation in Sweden. How would you say that the Swedish market is doing right now?
Yeah, so the Swedish market has been struggling a bit for a while, and that was also the case in the first quarter. Revenue fell by 28% in the Swedish market, and it's mainly due to the weak construction market in Sweden. Profitability also remained in the red during the quarter. So the personal adjustments they have made during the quarter, that was not sort of visible during the first quarter, but hopefully from Q2 and onwards. But of course, a more significant recovery in profitability will require sales growth. So that is sort of the main focus right now. But I think, looking forward, and as the company mentioned as well, the Swedish business will probably be quite weak for some time due to its dependence on new commercial building sector. And that will probably not be a visible recovery until going into 2026.
If we're looking at the segments, it's the building segment that is performing poorly. Did the management give any indication in the earnings release or in the earnings call as to when they expect to see a turnaround at that market?
Yeah, so the company did not provide any guidance this quarter either. They stopped doing that from Q4 due to the uncertain market environment. But looking at the company's commentary, if you sort of compare Q4 compared to Q1, so in Q4 they stated that the market environment is uncertain, and in Q1 the company said that the market has bottomed out in Finland, that they have seen that, and that they expect a gradual recovery in the second half of 2025. So I guess you can say that the commentary is slightly more positive, and of course the visibility is also better now in Q1 compared to Q4. So that's on a positive note, of course. But with that said, I think that we should not expect a steep recovery from here. So the construction market in Finland will likely recover slowly from H2 25.
But we can see some positive signs in the order intake.
Yeah, the order intake grew across all business areas, so that was a positive sign, and they sort of broke a negative trend, and the order book also grew sequentially to 157 million euros. So.
But right here and now, you are still waiting for a better risk and reward to view the share positively.
Yeah, so looking at the earnings valuation multiples, they are on a quite high level. And the DCF and relative valuation paints a similar picture. And the leverage is, of course, also high due to the weakened profitability. So all in all, we think that the risk reward is currently quite weak, although we don't expect that this kind of short-term performance right now is the new normal. We expect that the performance will be better going forward. But all in all, I would say that the risk reward on current levels is quite weak, and we stay on the sidelines for now.
I understand. If you want to read the report, you can find it in the description or at inderes.se. Thank you, Lucas, for taking the time today.
Thank you very much.